Welcome to Unbiased Investing. Today, I will be sharing an interview I had recently with Sue Ennis. Sue Ennis is the head of investor relations, corporate development, and marketing at HUTMF Mining. We began the interview by reviewing my Bitcoin mining model, which goal is to quantify and rank the various Bitcoin mining companies against one another using a forward-looking adjusted EV to EBITDA metric. After the model review, we dive into a handful of questions which have been submitted from the HUTMF investor community. These questions include the following: Validus partnership and expansion plans, HUTMF's recent move into Ethereum mining, the Bitfury Partnership, HUTMF's HODL Strategy, their marketing and public relation goals, as well as the risk of shareholder dilution. I have included timestamps in the video description so you can easily navigate to the questions that interest you the most. If you have any additional questions, feel free to follow up and reach out to me on any of my social media platforms, and I will be happy to offer my opinion or integrate them into future interviews such as this one. With that said, if you find any value from this interview, please give this video a like and consider subscribing for future content similar to this. As well, I would like to mention that I will be updating the Bitcoin mining model to incorporate some additional companies, as well as update the recently disclosed financial information that was released on April 30th. That video will be dropping by the end of week or Friday, May 7th. And that concludes the video introduction, so let's dive in. My name is Jesse Ross, obviously. I'm located not too far from you in Western Canada. My background is in chemical engineering and project management within the mining industry in Saskatchewan. Later, I developed a passion for finance and investing. So since I've discovered that passion, I've created a YouTube channel, Spotify podcast, and various other social media accounts with one common goal: to spread financial literacy, as well as act as an independent analyst who presents unbiased information on the companies I study.
Yeah, awesome. Yeah, so I'm Sue. I'm head of Corp Dev IR at HUT8. I've been in the crypto industry for about 4 years. I actually started um, mid 2017 at Coinsquare. I was one of the initial people hired to run the trade and wealth desk there. And then I spent after that about 2.5 years at a company called Shift Network, and they were an identity blockchain that works with governments who look to use the blockchain to optimize how they share KYC data. And that project just launched, which is awesome. I also was working with Voyager Digital, brought Voyager Digital to market, did IR for Voyager Digital, helped them with some of their raise or a raise they did about a year and a half ago. Again, Steve Ehrlich, CEO, is a great dude. So that was awesome working with Voyager. And it's incredible to see what that stock has done. And I thoroughly regret selling my options at $1.60, thinking I was a genius, only to see it run to like $30 4 weeks later, or 8 weeks later. But so yeah, I actually, I was actually going to leave the industry altogether last December and do my MBA, staying in the crypto and blockchain space. But I was a little, I don't know how to say, like, emotionally hungover from the grind of trying to launch this project with Shift Network. Um, and then I had a few mutual friends of Jamie Leverton, the CEO, and I say that, you have to meet Jamie. She's taking over HUT8. You got to meet this chick. And I said, no, no, no. And then finally her and I connected. We hit it off. I heard the HUT8 story, heard about her background, and I was like, all right, I got to take this on. So I joined in December shortly after Jamie did, and really pumped to be here and incredibly fired up for the 2021 we have planned for you guys. And I think we have one of the best retail networks of any of our competitors. So I'm really excited to be chatting with you today.
Perfect. Yeah, I love the management team there. I've seen nothing but good things, and you guys continue to surprise us.
Yeah. So yeah, let's get into it. I'll definitely
Okay.
answer everything that I can.
Yeah, I know there's a lot of questions that got asked that I didn't include, just because I'm aware of what you can and can't share with us for
Yeah.
the most part, but there might be a couple that you can plead the fifth. Okay, so this is the model that I built to value all of the crypto miners that I could collect enough information on to actually properly put together an analysis. So the theory behind this model is to value it based on an enterprise value to EBITDA valuation metric.
Yeah.
And to do so, I took, obviously the share price, the outstanding shares from the most recent financial filing I could find
Right.
to calculate the market cap. Removed the most recent cash balance and added on the debt. And then also from any of the capital raises that were included in the diluted share count, I
Yeah.
then removed that cash as well from the market cap to determine what would be the enterprise value, including the HODL. I
Okay.
then took the HODL from the most recent announcement and calculated that it consists like constantly, it's updating all the time, pulling this information live to USD. And then it removes the HODL from the enterprise value of the company to get, I guess, an adjusted enterprise value. And the reason I remove the HODL is because there are other ways for us as investors to get direct exposure to BTC
Yeah.
through some ETFs in Canada and trusts, right, with Grayscale and stuff. So I don't think there should be a premium on the HODL within a mining company. There might be a small premium just
Right.
because you guys are able to take advantage of yield accounts and do certain contango in the futures market if you choose to.
Yeah.
But I don't think there should be much of a premium. So I haven't included a premium, but I have removed that HODL from the enterprise value of the company.
Okay. Okay, cool.
Okay.
So I'm just curious though, when looking at EBITDA, did you incorporate everyone's machine and data center depreciation schedules?
No, no, I did not. It does not
Oh,
have
okay.
depreciation, right? It's earnings before depreciation. So
Yeah.
uh,
Okay.
yeah, so I know that's one tricky metric to look at because each company is depreciating their assets over a different time frame. I
Mhm.
believe Hut 8 has taken the stance that it's a 24-month depreciation cycle on
Yeah.
their ASIC mining, and that seems to be one of the quicker ones in the industry. And I know you guys continue to run miners past 24 months.
Exactly.
Um,
Exactly.
yeah,
So
so if I include depreciation, it just skews the metrics and it
yeah.
actually like it makes you guys look worse
Yeah.
when you guys buy new equipment, right? Because you're writing that equipment down faster. And so that just wasn't something that I could add into the model
Yeah.
without skewing the results too much.
Yeah, I can tell you though for sure just from an institutional so one of the reasons so we do have the most conservative accounting principles out of any of our competitors in
Mhm.
the industry, and the reason for that is because balance sheet protection and the health of our income statement and what we've paid at what times and for what amounts is something that we're very cognizant of, and at the end of the day, you know, as we continue to attract more and more institutional eyes on us, that's the kind of stuff that they want to see. They want to see that conservative balance sheet management strategy. So that's one of the reasons why we've done it the way that we've done it. Just as a sort of FYI about when you look at us versus everyone else.
Yeah, no, that's good. And I mean, one of the other things that I've noticed with your accounting is that you guys include everything at site in
Yes.
your gross expenses there, where some companies just include the energy costs and maybe the maintenance costs. And so your actually price per mined Bitcoin seems higher than most companies, but obviously that's just an accounting trick that
Cool.
they're pulling. So.
But it's also, yeah, and that's again, as we look to be sort of the Barrett Gold of digital asset miners, you want to give the market retail institution, everybody who's going to potentially give you a dollar, you want to make sure that they're giving you a dollar with a clear understanding of what the full costs of your business are. And we think it's very misleading just to give electricity and maintenance because that's not all that goes into mining a coin, right? So
Yeah.
thanks for bringing that up because that's again something that I don't know if a lot of people understand, but that is super important to us.
Perfect. Yeah. Moving on. So the next little portion here, this second table is the calculation of the EBITDA for each
Mhm.
of the companies. And now the only thing that really differs between the companies is their hash rate.
Yeah.
For the profitability and the revenue generation, I'm using a 90-day profitability looking backwards. So I'm
Mhm.
using the 90-day simple moving average of Bitcoin mining revenue
Mhm.
per terahash.
Mhm.
And then I'm using the most recent disclosed hash rate from
Mhm.
each company and not including any potential hash rate moving increases moving forward,
Okay.
because I think this model to me is not representing what the stock price should be in a year. It's
Right.
telling me what is the most undervalued right now for current
Yeah.
operational conditions, right?
Yeah. 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 No, I mean, I do like that you're not focused solely on future exahash just because, people who actually know how the network works, you can't really estimate how hard the entire network difficulty is going to go up, right?
For
So,
sure. Once
so
we see supply chain in the semiconductor
come
space
back
continue to
online.
develop,
Yeah.
that network hash rate is going to increase exponentially until these margins get down from the 80% region.
Yeah.
Yeah.
Absolutely.
Okay, so and then for SG&A, I just estimated annually based on most recent quarter. I do expect that to increase, but it's such a small portion of each company's expenses compared to their gross profit and their revenue. So I don't think that's a massive skew anyway in this analysis.
Mhm.
So once I had um, this EBITDA and the EV calculation, I
Mhm.
went on and calculated their forward EV to EBITDA multiples,
Mhm.
and I assumed a fair value EV to EBITDA of 10. Now,
Mhm.
why did I choose that? 10 is pretty common in value investing.
Mhm.
It also, in a space of so much growth like we see right now in the crypto market, you could definitely justify a higher multiple. However, the fact that crypto does have some inherent risks that you don't see in other industries, you
Mhm.
could also justify having a lower multiple um, than 10. So
Mhm.
that's
Mhm.
kind of where that came from. That's just they're all 10. So I think it's kind of fair to compare each company to one another.
Mhm.
And so from this calculation, I get a fair value share price, but this does not include the current HODL. So
Mhm.
here we see this is their forward EV to EBITDA share price. And I calculate then what the average EV to EBITDA on the core business is on
Yeah.
the NASDAQ listings and also the TSX listings. So
Yeah.
as we see here, the NASDAQ listing EV to EBITDA is 37.0 between Mara and Riot.
Mhm.
And for the TSX, we get a 5.2 from the other four companies I have analyzed here.
Mhm.
And then in this final section here, I take that EV, EBITDA. So this is the same table as we saw above. This gives me the EV to EBITDA share price. And then I add back in the HODL and get my target share price. And then I also take into account the current share price and calculate my expected return. So on this metric, I have HUT8 as number 3 for expected return in the short term, with Bitfarms just slightly ahead of HUT8. And DigiHost is way out number 1, but I would like to add that their financial information was not extremely recent. So there's
Yeah.
a lot of uncertainty there for me. And it's not a massive position. And full disclosure, I am invested in almost every one of these companies that I have analyzed.
Mhm.
So,
Okay. Interesting. Um, Sorry, do you mind just quickly explaining this NASDAQ premium?
okay, so that's the NASDAQ premium is if all of them basically it compares the average of my current share price
Yeah.
to my target share price or my fair value share price, and then
Okay.
divides it by how undervalued the TSX miners are.
Yeah.
So that's the average. So in comparison, let's say the TSX is half, 50% undervalued, and I
Yeah.
think the Nasdaq is 200% overvalued.
Yeah.
That would result in a Nasdaq premium of 600%, right? Because
Got it.
it would it would be 3 divided by 0.5.
Got it.
Yeah.
So that's very interesting. This is an incredible model. It's so funny. There's really only two guys in the traditional finance space who do coverage, at least that I know of crypto miners. And it's like some of the stuff that, guys like you come out with is just extraordinary. And I just love to see things like this, because I don't see this. You don't see this right now in the traditional financial space, and this is pretty great what you've come up with.
And one of the things that I've found is, because it's on it's public information, all the
Yeah.
network difficulty is public. You
Yeah.
can see the changes daily. You can see the block rewards. You can see the transaction fees. Everything is real time. You can
Mhm.
build a model like this and pull the information in real time and
Yeah.
see how the stock price goes up and down. And I mean, you can chart my expected returns over days, months, and adjust the model and see, like, okay, when it's 50% undervalued, it might be even though it's undervalued in my perspective, the chart might tell me to lower my exposure, because that's typically when like the peak happens, and then it falls back to 80% undervalued or something. So using that historic information from this model is also kind of how I control the weightings of my
Mhm.
exposure to the Bitcoin market.
Very cool. Very cool.
And then I do have another one to talk about, but I'll bring that up during the questions about your expansion into Ethereum mining.
For sure. And again, yeah, I'll answer as much as I can.
For sure. Perfect. Well, I'm going to dive into the additional interview questions. So my first question is, Hut 8 has not publicly announced any new expansion plans for an additional facility. However, there are still miners arriving at your current operations. You once replied to one of the tweets saying that existing miners being replaced would not be sold, but held by Hut 8 Mining to continue mining in the money. Is it
Yeah.
safe to assume that these lower efficiency miners will be used in conjunction with the Validus Power Corp partnership to mine Bitcoin using the mobile infrastructure?
So that's a good question. I think, again, because we have such a conservative depreciation schedule, and historically we are always focused on refreshing our fleet, no matter what the market is doing, about 25% every 6 to 12 months. We're in this incredible happy problem where we actually have a full fleet of multi-generational equipment that is mining and in the money right now. So in terms of infrastructure and what machines are going to go where, I'm not sure if you saw that we did, you saw we announced that 100 extra megawatts happening with Validus Power. What machines are going to go there? We're keeping our cards a little bit close to our chest for now, just because the dynamics are so crazy because of this semiconductor shortage. But I can tell you, in terms of expansion, we do have these NVIDIA GPU miners that are coming online, and are on track to be delivered for June. And the actual conversion. So I will be posting this in our FAQ that's coming out soon about the NVIDIA. That's an extra 1600 gigahash that was going to be coming online. And we're going to be getting paid out in Bitcoin. So we're actually going to be showing you guys the conversion of what 1600 gigahash actually means from a petahash perspective. And given current network dynamics, it's about an extra 590 petahash that's going to be coming online in addition to the 1.3 exahash we have announced. So it's, again, I'm going to show you guys like how the actual formula works in this FAQ that we're releasing. But in terms of expansion plans, we do think that is sort of a substantial metric that maybe we need to tell the market a little bit more about, if that makes any sense.
Yeah. Yeah, no, I have that similar analysis on my other spreadsheet here. Actually, kind of the same thing, converting gigahash on the Ethereum network to petahash on the Bitcoin network. But the thing that I would be curious from Hut 8's perspective is, what are you using to convert that? Like, what time frame are you using
That's a good,
for Bitcoin to Ethereum? Because that's something that fluctuates quite a bit as
yeah,
DeFi kind of pulses. So I know, you need to take an average over a certain period of time. Otherwise, that's going to fluctuate.
yeah, for sure. So that's a really good question. I actually don't know. I mean, I know we're doing a daily extra 2.5 per day Bitcoin is what we forecasted will be paid out,
Hmm.
given current network difficulty. But I hear what you're saying, so I'll definitely make sure that my head of tech addresses that. So
Okay.
sorry, I don't have that
Hey,
right now.
not a problem. It was just something that came up. So one of my other questions about the Validus agreement here, or the partnership, is what is expected in energy cost reduction to deal with the logistical challenges of performing mobile mining?
Yeah. That's another thing. I have to wait until we
Okay.
like you said, but look, we will tell you guys. And we did this in the spirit of um cost effective generation for sure.
Hmm.
I don't know if you've been following like look, again, we'll tell you guys what the price is again when I legally can, which
For
should
sure.
be soon. And I'm sorry about this.
No.
This interview sucks because I'm not really saying anything new. But um, look, bringing down the cost of power as much as possible absolutely is a priority for us. It's also been really great to see that the cost of solar and wind power has also exponentially come down. I'm not sure if you saw that recent piece that ARC and Square came out with about the LCOE of solar and wind. Um, so we're pretty excited about what that means for us as well. Being powered by wind, being in such a windy place like Alberta, and the fact that our data centers are mobile. And so we're able to pivot them if we needed to, given sort of where the wind is blowing. So I didn't really answer your question, but that's sort of the best I can answer your question right now.
Sounds good. I assume you might take the same road on this one. I was just wondering if in that agreement,
Yeah.
if is that revenue from the mining coming to, you don't have to give any details, but is it coming directly to Hut 8, or is there some kind of like split revenue sharing between the two parties?
This would definitely be like it this is in the spirit of like a JV style partnership. Like we're looking to grow
Yeah.
quite exponentially with Validus.
Hmm.
So
So,
again, we'll let you guys know what that means, but I can
okay.
tell you this isn't like a one and done sort of deal. Like we're looking for a partner out of
So it
this.
would be safe to say you're not just leasing these units from them and then using them by yourself to generate your own Bitcoin. There, you guys are getting some type of discount in order to give them some type of upside potential.
It's a
And
very
both,
strategic partnership. Yeah.
yeah. Okay. Perfect. Well, that sounds good. Is there any plans to expand outside of Western Canada, or are you just super happy with where you're at right now?
No, I mean, one of the things that we love about this particular Validus fleet is that it is mobile, and we've also recently brought on a CFO, a guy by the name of Shane Downey, whose wheelhouse is cross-border complex commercial agreements. So looking at how we can leverage mobility with respect to expansion, especially if we've got the technology that can capture that flare gas. I mean, most of the flare gas is produced in the US out of North Dakota and Texas. So those are definitely areas that we would be looking at potentially using this technology. And again, using the expertise that we have on our team, we're now sort of fully staffed up to be able to execute greater expansion, potentially cross-border.
Perfect. Okay. I'm going to move out of that Validus agreement here and
That's fine,
go
but
to,
I will say we love Alberta. We love
okay.
Alberta. We love the government of Medicine Hat, the climate. You guys are amazing. So
I'd,
Alberta will always be our home base.
I'd tell you to come to Saskatchewan, but there's not much flare gas and potash mining.
Yeah.
So, okay. So moving into the Ethereum, you guys recently announced that you would be expanding into Ethereum mining with the purchase of 30 million USD worth of NVIDIA GPUs, which will
Mhm.
provide 1,600 gigahash of hash rate on the Ethereum network.
Yeah.
I did do an analysis here that I'll pull up in a second, and I used the average specs across the currently disclosed NVIDIA fleet of GPUs.
Yeah.
And that estimated to me that it would require 7.5 megawatts of electricity to get 1600 gigahash. Now, if you use the top of the line model, it would be around 6 megawatts. And then there's been some rumors about their new 22 or 220HX model that could potentially bring that down to 4 or 5 megawatts. So I'll let you comment on that if you want to.
Yeah, so I'm not allowed to disclose what the model
Okay.
is, but I can tell you that we're aiming, it's looking at about 4 megawatts.
Okay. Perfect. And so I'm just going to pop open that model as well here for you. And we can discuss kind of, I calculated the internal rate of return on that and compared it to what it would be as an investment in Bitcoin. So using these are basically the models that they had disclosed. I did not include the 2200HX. None of these models would kind of fall in line with what you were saying there about 4 megawatts. But I went through this and compared the current price that you guys paid down here to the most recent purchase from January 22nd of your M30S
Mhm.
purchase, and compared that if you were to able to get the same purchase price and obviously same delivery terms. Like I assume that might be one of the reasons you guys expanded into Ethereum is because of the difficulty to obtain ASICs right now. Okay, yeah.
Um, so again, back to what I was saying earlier, balance sheet health and income statement is something we are very, very cognizant of, and that we pride ourselves on being, using that as a priority in in every decision that we make. And so, yeah, I mean, absolutely. The fact that equipment that we bought last year for 20 to 30 terahash is now trading at about $120 per terahash is not, you know, a balance sheet risk that we want to particularly dabble in if we don't have to. But so we liked that this would be delivered, earlier versus some of our competitors who are waiting on equipment for Q4 or even Q1 2022, but also that it gives us that optionality um, into other chains. And like I said, we've got a head of tech who's sort of a DeFi staking yield farming master. Like we also liked the optionality. This wasn't just about, oh, we can't get equipment. It's nothing like that. It's this killed multiple birds with one stone. So yeah.
Okay. Well, I'd like to maybe come back to that once you're able to announce more
For
on the
sure. Yeah.
Ethereum mining. One of the important things I wanted to mention is based on the previous 90 days, if you
Yeah.
exclude capital cost using the best in class, the Antminer S19 Pro versus the 90HX, I've determined that using the 90-day average profitability between the two, you're actually getting a 60% discount on each Bitcoin that you mine
Yeah.
in terms of energy cost.
Hmm.
So would that be pretty accurate with what you guys are thinking?
Yeah, we actually posted this on our Twitter a little bit ago. Is yeah, it would bring our costs down, hypothetically speaking, again, given current network hash rates, down to about less than 5,000 per coin.
Okay. Yeah, no, so that's really enticing. I guess the only problem I've seen is when I did incorporate the capital costs and I assumed that the GPUs would be depreciated over a 2-year period like the ASICs, I
Hmm.
actually did get a higher rate of return on purchasing more ASICs, but I do understand the logistical challenges of actually obtaining those in the current market.
Hmm. Hmm.
So. Okay, well, I think actually that covered everything I had to say about the Ethereum miners. And like I mentioned, we should touch base again
For sure.
and I can update my model for that once once there's more information to disclose and we can actually see if this was an effective decision. But I do think as more companies are able to kind of arbitrage that energy cost on the Ethereum network, then we may see that kind of premium go back into Bitcoin. And I actually see that as bullish for Bitcoin price as more companies mine Ethereum and take their payouts in Bitcoin.
Yeah, absolutely. Yeah, it's interesting for sure.
Moving on to the next topic here is about the Bitfury partnership. So among the HUT8 investors I've conversed with recently, there seems to be a common theme regarding the Bitfury relationship. So on February 16th, Bitfury disclosed that they wanted to sell 8.5 million shares of HUT, or that they had sold 8.5 million shares, and they intended to sell an additional 8.5 million to continue their R&D and development of ASIC mining technology. So they have currently reduced their share count from 32.2 million to approximately 18.5 million.
Yeah.
Can you share your view on the advantages and or risks on the partnership with Bitfury?
Yeah. So for anyone who doesn't know, Bitfury was one of the preliminary co-founders of HUT8 back in 2017, 2018. And we actually had an exclusivity agreement with them from an equipment standpoint. But we broke that contract, that exclusivity agreement back in June. And that enabled us to make purchases of our MicroBT and Bitmain last year, which was great because the optionality we think is the most accretive to shareholder value. So look, Bitfury knows that they have needed to come to market with new technology because they haven't in a long time. So we understand that as hard as it's been for all of us, look, R&D is something they got to do. And, they've publicly tweeted / have also, conveyed to us that we are their preferred Canadian partner. And if they are actually able to get through this R&D period and come to market with a new chip, that we will be their preferred partner out of Canada. And so we do see it as a win-win. I know for sure there was some Twitter back and forth, but we have a good relationship with Bitfury. There's like 50 people at the company. Again, we look at this as a bonus that if they're able to spend this money wisely and come out with tech that we can buy preferentially versus our competitors, then it's great. It's not a bad thing for anyone. So, and again, we weren't open to the idea of remaining exclusive. Optionality is what's best for you guys and for us. So that was another sort of part of the deal that we weren't really negotiable on. So
okay. No, that's really good and informative. I kind of agree with your view on that. There's just been a lot of kind of, if you follow the forums on HUT8, there's been a ton of discussion around,
I know,
Bitfury driving down the price. And it's like, well, I mean, they were an early investor in HUT8. They do have to take profits at some point to kind of drive their own business forward, right?
Yeah.
So,
well, and it's just funny. Again, I think, yeah. It's not uncommon in any business when a partner is looking to expand or do R&D for them to sell an appreciating asset on their balance sheet, right? Like, I'm not just speaking about us, I'm saying in any industry, that's not uncommon practice. But I can understand where people are coming from, but I can tell you that the relationship is fine. It's good. We see it as a potential benefit to us.
So to continue on that, to my knowledge, Bitfury still has 2 seats on the board of directors. According to previous information, I believe this was to be reduced to 1 seat if they held under 20 million shares. Is that something that's in the works?
We'll let you guys know.
Okay.
Yeah.
Moving on to the HODL and your guys' account with Genesis. This is something that is big in the strategy to me. And this is something I would definitely like to be more clear from most of the miners. So currently you guys have 1,000 in HODL with the Genesis yielding 4% in cash. Now you have stated that you have 3,233 Bitcoin in HODL as of kind of the end of March, I believe it was.
Yeah.
So I'm assuming that's up to about 3,400 now. Don't say anything you shouldn't. But is there a desire to offer either add more to this account or pursue another option, and maybe have less counterparty risk? Or is there anything else like contango arbitrage you could do to help yield on
Yeah,
your HODL?
I mean, look, we'll definitely give more. You guys will let you know as it comes down, but I can tell you, yes, that's part of our strategy is how do we make this HODLed BTC work for us? How do we earn fiat without ever having to sell another Bitcoin for the
Mhm.
foreseeable future? I'm not saying we're never going to sell, but we are hodlers at heart. We believe in the bull
Sure.
case of Bitcoin, and making that BTC work and pay us in fiat is absolutely a priority.
Yeah. Like if you can get to the point where you can make enough money off your HODL to pay your operating expense,
That's the plan. We'd love that.
then yeah, because then it's like I would never sell this company. They're literally just they're growing their assets by earning interest off their existing asset pool, which is
Yeah.
just insane. Like that has got to be the end goal. So
And well, and that's, I can tell you that's where our head is at in terms of
mhm.
strategy, for sure.
On Twitter and other social media platforms, you've been pestered regarding the lack of marketing and PR.
Mhm.
And so, is there an action plan in place to address these issues, or do you just believe it's kind of a function of time before you get more coverage from the kind of modern financial world
So
as crypto adoption continues?
yeah, so I think what's funny is we are covered by the only two major guys who are actually covering the crypto miner space. We have wonderful relationships with Deepak Koshal out of Stifel and Kevin Deedy out of HC Wainwright. They're both great dudes who've done research on us. Um, I mean, we're working with Redchip out of the US. We love Redchip. They're an awesome IR PR firm. I mean, Jamie's been on Bloomberg. We do have a PR firm that we use in Canada, North Strategic. I think, again, you have to do sort of a very careful dance between too much sort of talking and saying things on social media and making sure that you're staying within the regulatory parameters. We want to talk to you guys as much as we can and tell you what's up, but at the end of the day, we have to make the OSC happy and make sure that we're not saying things that they're not going to like, because they can put a quick stop to business if you do something on social media that they don't like. So
Mhm.
that's a big part for us. But yeah, for sure. I mean, increasing, we're at a ton of conferences, and definitely, continuing that trajectory, talking to more guys like you is definitely a priority for me. So yeah, I can say it's a priority, but right now we have to do a sort of delicate dance with making sure we're staying on the right side of regulators and that sort of thing.
Understood. Yeah, I watched the HC Wainwright conference yesterday, and I thought that was super intuitive. And I was already bullish on Bitcoin, but the way they talked about their HODL and every company has seems to be committed to it long term,
Yeah.
absolutely even made me more bullish on the price appreciation of Bitcoin over the long term.
It's also so crazy to see guys like just the way that traditional finance has come around to the asset class. Like JP Morgan goes from we think it's tulip mania to meh, maybe it's just not for us, and now they're offering a Bitcoin product. Like it's
Yeah,
so crazy to see. And like I said, some of the calls that I get now versus when I first started in the industry in 2017, like the caliber of institution that's calling me unsolicited is just wild. It's so much fun to see. It's so much
yeah.
fun.
Well, it's great to be in before the mass adoption occurs.
Yeah.
I'm happy to see it finally come around, but yeah, it's definitely been beneficial to me and I'm sure yourself as well, being
Yeah.
in that industry. So most of that PR and marketing stuff came from just kind of the value of, I guess, the share price of HUT and shareholders being upset. Now, the way I view it from a long-term perspective is you guys are growing value on your balance sheet in your core operations. The share price doesn't always move with the value that you're creating,
Mhm.
obviously. So I just wanted to say that's why I brought it up. It was something that was asked to me over and over. But I do believe you guys personally are doing a really good job. You guys communicate with guys like me on Twitter, everything else.
Yeah.
And your press releases are just, operational updates are as common as everyone else in the space. So
Yeah.
I wanted to give you props for that.
I can also tell you that, like I said, we do consider ourselves like the Barrett Gold of crypto miners. And we want more institutions looking at us and investing in us as the Barrett Gold of digital asset miners. So you will never see HUT8 make some of the crazy headline statements that some of our competitors do. We guys, like, we're not going to do that. Like, I'm not going to say, we're never going to be like, oh, by 2022, we're going to take over 1/20th of the Bitcoin network and install 1 million machines. You're not going to see that out of HUT. If that's what you guys need, it's not HUT. It's not us. So, because regulators don't like to see that. Institutions don't want to see that hyperbolic sort of headline. We tell you guys what's real, what's happening now. And we try to be as transparent as possible. Like I said, while still doing that dance.
Yeah, that's one of the things that I saw recently with DigiHost that I didn't like was I think they set their target to be 5% of the Bitcoin network hash rate by 2023 or something. And how can you, like, you have no idea how that hash rate is going to grow. So it's
can't control what's going to come on out of China, what's going to come on out of South America. You can't control that. You can't control that.
Give me a quantitative value in petahash that you're targeting, or based on the gross margin that you're making, a rate at what you're going to increase that petahash and reinvest. But targeting a percentage of the network hash rate just makes no sense to me.
We will never talk like that. But I get that some retail wants to see that, and straight up, if that's what, we won't do that. So but again, that's for your guys' benefit, right? Institutions want to see that conservative. So yeah.
Okay. Last question before I get into the closing comments here, and I hope you can talk a little bit to this one. Not too much details, of course, but it's based on your open shelf prospectus. Most of the crypto miners have announced an open shelf prospectus, so they're able to dilute shareholders on the open market. Based on the current trend of the share price, I have a feeling that shareholders are being diluted pretty substantially. And your guys is open shelf prospectus for 500 million Canadian, and your current market cap's only about 800 million Canadian. So that level of dilution potential is pretty scary to me.
Look, it's common practice, because we did a raise in January. It's common practice when a company is cashed up to issue like a line of credit that can help you tap the market fast. This base shelf prospectus is 25 months long. Again, I tell people, like, look at it like a line of credit. It doesn't mean just because you've issued this much of the line of credit that you're actually going to use it. It doesn't. It's just a way to tap the market fast. Again, I'm not saying we're never going to tap the market, but we would only do it if it was accretive to shareholder value, and not like, if you hear what I'm saying, like that, it doesn't mean that we're going to use that full amount, especially when we're trading where we are. If you hear what I'm saying, that's sort of the best way I can answer it. It's a line of credit. It doesn't mean we're going to use that full amount. And if anything we do is in the spirit that is accretive to shareholder value.
I agree with you. I know it doesn't have to be used. It's a long period. You do want to take advantage of it if, the crypto space, inherently there's booms and busts and serious FOMO. So it does make sense if your share price gets out of whack, that you can, issue some shares to generate cash. But based on the current valuation, like, you see my upside target near 150%. At the current, like, today's date, the current valuation, I think it should be at least 2 times what it is. Like, I would rather see the company taking on debt at 10-15% than actually issuing shares at the current share price. But I guess that's a personal decision for me. Obviously, that does have some risks involved, but just that's what I would say. I'm scared to be diluted. I've been invested in good companies before and just been kind of diluted my position down into making it a bad company. So
no, and again, I can't tell the future, but I can tell you we're going to do things, guys, in the spirit of accretive shareholder growth. Everything we're going to do.
Okay, perfect. Well, closing comments here, just some easy, quick, fun questions that came from the community. Where can investors get HUT8 swag? Many people have asked for hoodies and hats on the website.
Yeah, so I have some of you guys have reached out to me directly, and they're stuck in China right now. Like, we haven't gotten them. I ordered them back in February, so I'm following up on trying to get that. I want us to do a merch store. We're going to be redoing our website, and a merch store is something that we're definitely looking at. So you guys can just buy hoodies, hats, t-shirts, whatever directly, because we love that idea. So
Yeah.
hopefully a merch store coming soon.
Hopefully they're not still stuck in the Suez Canal.
Yeah. Oh my God.
Okay, and then one of the old tweet chains we had talked about, they're doing the Miami Bitcoin conference right now, or sorry, in June in Miami,
Yeah.
and we talked about going houseboating at the shoe swaps. What share price or operational target do you need to hit before we have a Canadian version of the Miami conference?
I wish. Oh, I don't even know. I don't even know. I think I remember this tweet. I was like talking about Lambos or something like
Yeah.
that. Um, Guys, I don't know. I don't even think. I think my lawyer would kill me if I threw a number out there. So I'm not gonna say, but God damn, that would be really fun. That's
Okay,
all I can say.
well,
It would be really fun.
I won't quit tweeting at you about that. But eventually, when we hit some type of crazy operational hash rate or Bitcoin hits some crazy price target, then we'll get back on that. We'll
Oh yeah, we'd
discuss
love
that.
that. Yeah.
Okay, and lastly, to end my podcast, I always ask everyone if they have any book recommendations or shows they've been binge watching to recommend to my audience, because,
Oh, love this. Just like any type of book right now.
well, investing books is typically what's most interesting to my audience. I mean, I do a lot of other things, so they can read faster than I can, so I run out of recommendations.
Yeah.
Um,
I
but
love
anything, it can be like, I do a lot of research on data science. I
yeah.
read about psychology as well. Like, all that stuff tends to help me with investing, even though it's not as an or listed as an investing book. But so anything you want to share?
Yeah, I will say that I think the first book I ever read that got me into investing, this is like 15 years ago, was Peter Lynch's Beat the Street. What I loved about it, so he's best friends with Warren Buffett. He's sort of in that vintage. What I loved about it though was he really simplified investing, basically like KISS, keep it simple, stupid. If you can't explain what the company does to a fourth grader, then you shouldn't be buying it. So I just loved how he dumbed down how you should look at investing and investments. So Peter Lynch Beat the Street is definitely a classic in my opinion. Um, I think, you know what, anyone who sort of wants to know how the crypto kids, like the OG, the cypherpunks think, I think like the book Neuromancer is a big one that sort of permeates the crypto OGs. It's a sci-fi book. Um, yeah, those would be sort of my two recommendations for people who are getting into investing and also wanting to sort of understand how the brains work of the cypherpunk movement.
And any shows or movies you've been binging lately?
Uh from shows, I really like I've gotten into The Wire. I love like Flack on Crave. Like I'd say like The Wire right now.
Okay.
I know it's an old one. But what about you? What are you binging right now?
Well, one of my all-time favorite shows is White Collar,
Okay.
and it's kind of a con man, a professional con man. He's like a art forger. He ends up getting caught by the FBI, goes to jail, and then the FBI pulls him out to help catch white collar criminals. But
Yeah.
he also, like, while he's out, he's in the background running like schemes himself. So he's playing both sides of it.
Oh, nice.
And it's an older show. It's probably 10, 12 years old, but it just came back out on Disney Plus. It was like you couldn't find it anywhere before
No
that.
way.
So I've been binging that with my girlfriend because she's never seen it before. And I would highly recommend it. It's awesome.
You know what I would highly recommend from like a trading floor perspective, Industry by Lena Dunham on Crave was awesome. I really liked Industry, and it sort of gave a good insight into like what it's like being on the trading floors. And I think it was in 2000, based on 2008, right before the stock market major
Wow.
crash. Yeah, so that was really good too.
I'll add that one to my list for sure.
Yeah. So thank you so much for having me. Sorry you caught me on a day that I've been on Zoom calls since literally 5 a.m. But I'm really glad that we got to connect.
Well, there it is. Thanks for listening to the interview. The model we reviewed at the beginning of the interview has changed significantly since. I will provide weekly updates to the model on my Twitter account at Unbiased Jesse R. And as previously mentioned, I will be dropping a new video around May 7th with a more detailed breakdown and updated version of the model. In regards to the HODL strategy, HUT8 has since deposited 1,000 of their Bitcoin into a Galaxy Digital Yield account. This is an equivalent 4% yield to the one held by Genesis currently, but diversifies some of the counterparty risk. Sue has mentioned she would like to conduct a follow-up interview once they can release more information on their GPU mining strategy. So please submit your questions in the comments below. The links to the 2 book recommendations from Sue are also in the video description. If you'd like to pick one up, feel free and continue your lifelong learning experience. If you enjoyed this video, I again ask you to hit the like button and consider subscribing. It's free for you and it really helps my channel grow and will allow me to continue to spend more time on these interviews and additional valuable content. Thanks for watching, and may the markets be ever in your favor. Cheers.